We're here with SEC Commissioner Robert Jackson Jr. Commissioner, thank you for being with Bloomberg.
Delighted to be here. Thanks for having me.
It has been a remarkable day, past 24 hours for the Dow, and you've been quite critical of the U.S. stock exchanges, saying that only 3 corporations own the 13 exchanges and that there just isn't enough competition in the markets.
Well, absolutely. And what I'm worried about in this space is just making sure that the stock markets we have are as competitive as the economy that we deserve. Fundamentally, we have 13 public equity markets in the United States, and 12 of them are owned by just 3 corporate conglomerates. Now, it's not very common for you to buy an identical business and continue to run it separately, but our stock exchanges do that so they can charge investors to connect to all the different exchanges. Those connectivity costs have been rising for years.
And so when you look at what has happened in the Dow in particular, what specifically do you think needs to be done, or are you concerned at all about what you've seen happen in the Dow and the sell-off in the past 24 hours?
Well, markets will rise and markets will fall, and that's just a natural product of the stock markets that we have. But what I want to do is make sure that American investors who are putting away their retirement savings and their kids' college education, that they are paying to access our capital markets the lowest possible cost for the safest possible markets. We have the most deep liquid capital markets in human history, and our investors deserve competition in producing those markets.
But when people hear that type of rhetoric, they're going to say, well, hey, wait a minute, I thought that was the FTC's job or the Department of Justice's job to look into antitrust laws or to look into competition. You say not so fast. You think that the SEC ought to have a new office that should look into these type of issues.
That's absolutely right. I'm calling for the creation of an Office of Competition Economics within our Division of Economic
What would it do?
Risk Analysis. What it would do is look across our capital markets, the fact that we have only 4 major accounting firms, the fact that investment banks charge exactly 7% to take companies public, the fact that we only have a few credit rating agencies, the fact that shareholders only have access to 2 proxy advisory firms, and ask whether or not we have the kinds of competition in our markets that American investors deserve.
And you don't think we'd have it? You don't think we have that competition?
I don't think so at all. And let me just add one more thing. A lot of people take the view you just mentioned, which is that we can leave competition to the FTC and the DOJ. Having done that for the last generation is what got us in this situation. The birth of the Securities and Exchange Commission was from competition economics, and we need to get back to that history. We need to bring competition back to the SEC.
You know. Let's be honest here. You're in the progressive seat of the SEC. So when you look at the political landscape right now with the Republican-controlled Congress, a Republican White House, what is the appetite amongst your colleagues at the commission and given the political landscape for some of the reforms that you're calling for?
Well, I don't know how many of my colleagues I'll persuade, but here's what I'll say about that. Competition is bipartisan. In fact, the statutes that enable us and require us to consider competition in our work were statutes that were passed by Republican Congress and signed by President Clinton. So for me, the idea that we should be pursuing rigorous competition, I think, is more bipartisan than people imagine. Now, whether I'll convince my friends on the commission about that, we'll see, but I'm sure going to try.
You wrote an interesting op-ed with Preet Bharara, the former U.S. Attorney for the Southern District of New York. A lot of people familiar with him and his style. In this joint op-ed, you say these insider trading laws need to be reformed. What specifically needs to be done, Commissioner, to the SEC insider trading laws?
Well, as we say in the op-ed, we have no statute in the United States that specifically prescribes exactly what we mean by insider trading. The phrase insider trading doesn't appear in the laws of the United States.
Why?
It's because of our history. What we did in terms of regulating insider trading was use a general statute to outlaw insider trading, and there are 2 problems with that. First, it invites people to explore the margins, to see whether or not they're actually cheating, to pursue information and trade on it, but try their best to escape liability. And I don't think that's a good use of Americans' time or investors' money. So it undermines fundamental investor confidence that we're actually enforcing the law. But here's the second point. Defendants don't know what the law is. Because the courts are constantly changing their minds about what it means to be an insider trader, people in the marketplace don't have notice about what's allowed and what's not.
People like Elon Musk.
Well, I can't comment on any particular enforcement matters, but I will say...
You had a lot to say about the SEC and Twitter. I take it you have any thoughts on his tweets either.
I'd be very happy to comment on almost anything else, but unfortunately I can't comment on enforcement matters.
Well, just to wrap it up, though, specifically, you guys are calling with Mr. Bharara for this creation of a commission of sorts. What exactly would that look like? And in the longer term, as these type of policies, is particularly within progressive circles, gain more traction, what's the ultimate goal?
Well, what this task force is going to do is bring together judges, academics, practitioners, prosecutors, defense attorneys, all the folks who've been thinking about insider trading law for the last 30 years, and going to get them into a room and solve some of the key problems in that law. Let me give you an example. In current insider trading law, it's not as clear as it needs to be that if someone hacks into an American public company and trades on that information that they've hacked, that that's illegal. We need to make sure that there's no kinds of gaps like that, especially as our economy gets more and more sophisticated and technology becomes more and more important. This group is going to put together a series of recommendations, I hope, for the Commission to consider and also for the Congress to consider in clarifying what we mean by the law of insider trading.
Whether it's Tesla, whether it's Facebook, whether it's Wall Street, or even increasingly cryptocurrency, there just seems the regulations really haven't kept pace with the technology. Any thoughts on crypto? Final question.
I think that's right. So on crypto, what I'll say is that those markets are changing so incredibly quickly that it is hard for we as regulators to keep up.
And consumers to understand.
I think that's right. And so if we're doing our job at the SEC, we need to make sure the law is keeping up with that to make sure American investors are protected.